Hello and welcome to the program. I am Folashade Ogurinde. The decline in the value of the Naira is worrying. Recently, the Naira plunged to a record low of 950 Naira per dollar on the black market as demand for foreign currency outstripped supply. While the CBN has blamed the ongoing decline in current unofficial remittances from the diaspora, experts say decline in forex supply from export earnings, foreign investment, foreign aid and external loans is also to be blamed. The nation's inflation rate has also surged. According to the latest updates by the NBS, the Consumer Price Index (CPI), which measures the rate of change in prices of goods and services, rose to 24.08% in July 2023, up from 22.79% in the previous month. Now, the latest figure is a seventh consecutive rise in the country's inflation rate this year. Well, let's bring in some analysis on this story. Joining me now is Owolabi Samson, who is an Associate Research and Portfolio Management at Zcrest Wealth. Thank you very much for joining us. Now, before anything, let's begin with the NBS inflation rate for July, which according to the agency rose to 24.08%. Now, what does this figure tell us about the state of the economy?
Okay, so thank you very much. Now, concerning the rates of inflation in the economy, you just realize the fact that we are seeing the true and a better picture of what has happened in the market over time. And what I'm trying to say concerning this is the fact that, we now see the full impact of the fuel subsidy removal and also the FX unification. We are seeing it in the inflation figures. For the month of June, it wasn't really reflecting that much. So it's just showing for the impact for 2 weeks. However, for July, we are seeing the full impact, which was the major reason why inflation skyrocketed from 22.79% in June to 24.08% in July. So we are seeing the impacts of that surge. And when you look at the fact that they removed the subsidy, on fuel, it made the prices of petrol to surge significantly to around 600, above 600 naira per liter. Now, when you look at that, you realize the fact that the trickle effect is that cost of transportation is going to skyrocket significantly, and also when cost of transportation skyrockets, it's going to affect the prices of every food item because we have logistic issues in this country. We have a situation that we need to transport food from a particular region of the country to another. So this gap and this distance between each region is going to cause that particular hike in the cost of transportation of foods, which is going to affect the prices of food items. So these are the major issues that we've been seeing around the market that has been affecting the food prices and also the headline inflation. And it's something that we do not see it tapering anytime soon. It might also go up significantly as time goes on, especially if the price of petrol, if it increases over time.
Now, I was just about to touch on that, in terms of projections now for coming months, in terms of the uptick in inflation rates. So if that happens, just as you've predicted, what state does that leave the economy?
Okay, so the state that is going to leave the economy is just that we are going to see a wider gap between the rich and the poor, and we might also see some people that are classified as rich fall under the poor category. Because when you look at it, just let me use a mathematical and a simple term to analyze this. Imagine someone that is earning 100,000 naira as his income for the month, and then inflation is around 24% currently. It was even 24.08, but let's assume inflation is at 24%. What that just means is that the person's income, the purchasing value of the person's income has declined by 24%. And what this means is that we are going to be seeing that the value of the person's income is going to be around, let's say, around 76,000 naira. So the things that the person can purchase in the market is just 76,000 naira, and that is just the short term, a layman explanation of the impact of this inflation. So we're going to be seeing a lot of people having this issue, having to buy food items, buy different meats in the market. They're going to have this issue on their income, and if the income is not increasing at the same pace or at the same rate, the inflation is increasing, then it's going to affect people a lot, and we are going to see more poverty. The misery index in the country is going to increase significantly, and this is a major issue that we need to look at in this economy. And to also retreat and to just expatiate more on this, we also need to understand the fact that inflation can be relative. Relative in the sense that the headline inflation that we have currently is managing like is like an average of what we can see in the economy. Now, inflation for each person can be different because the kind of food item, the kind of clothing, the kind of needs that we want are different. So, for someone that is buying goods and services that are affected by the inflation more, that person is going to be seeing a higher inflation effect on his income. And for someone that maybe is buying goods and services that is not really affected much by the inflation, is going to be seeing a lower impact on his income. So those are like the major factors that we need to respect and understand. And so we'll be saying that this is going to affect people's income significantly. When you look at the streets of Lagos, you'll see that we've seen a lot of people like dump their cars at home just to use on the public transport. A lot of people can't even like transport and drive their cars to work again based on the fact that the price of petrol has risen significantly. The amount of they use to full their the fuel tank to or just to like fill it up, it has increased significantly. And this particular amount, some people might not be able to afford it. And just to limit cost on their own aspect also, they might just decide not to like take that car. So all these issues are the major factors that we are looking at. And these are things that we see that it's going to really affect people going forward.
Now let's talk about the weakening of the Naira. Why are we experiencing such a rate of depreciation?
Okay, and when you mean depreciation, you mean in the naira, right?
Yes, the Naira to the dollar.
Okay, now when you look at that, one major factor that we need to understand is that the appreciation, the value of a country's currency, it is based on its ability, to like generate let's say to generate income. This is what I mean. The demand for that particular currency it goes a long way. So if a currency can export a lot of goods and services, if the country can have a lot of this comparative advantage over other countries, that country will be able to like develop and have a strong value in its currency. However, in the situation of Nigeria, our whole exports have been declining over time, which has been our major source of income in this country. And we are seeing this kind of declines in oil production based on the fact that there is oil theft, there is vandalism, and we also have several structural issues in the economy. So all these factors have been the major factors that have been causing the decline in the Nigerian currency value. And also, when you look at the fact that there's much demand for the US dollar compared to the naira, the more the demand for dollar is, the lower the value of naira will be becoming in the market, and the value of dollar is will be increasing in the market. So these are the major factors that have been causing the decline in the naira. So, and this is something that we think that the CBN needs to like formulate policies and work towards it, just to ensure that the naira stabilizes again over time.
Well, we'll take a breather here, Mr. Olabi, but when we return, we'll definitely continue our conversation on the depreciation of the Naira and what next for the country. Do stay with us. Welcome back to the program. If you're just joining us, I've been speaking to an economist, Owolabi Sampson, and we've been discussing the depreciation of the Naira against the dollar, as well as Nigeria's inflation rate. Now, we need to talk about something very important. That's President Bola Tinubu's policy to unify the exchange rates, where he introduced the willing buyer, willing seller to determine the exchange rates. Can we say now, is it safe to say that this policy has failed?
Well, to say that the policy has failed, I think we are going to be too forward to say that. Now, I will use this as reference. We are not the first country to do this. Actually, we've seen a country like Egypt do this before, and when they did the unification, like a particular policy like this, similar to this, we saw that their exchange, the naira, their currency rather, their local currency, it had saw a decline in its value for some months and for some period before after a long time it was now picking up back. Now in the case of unification of this FX system is something that is going to let's say we've expected this current issue that we are having. We've expected it to be the case because when you look at it, you realize that market players they are going to try to find a way to make sure that to tap into the changes that have been made, and also the CBN had a lot of backlogs over time that they've not really let's say attended to. When I make backlogs, these are people that have demanded for the US dollar for a very long time and they've not been able to repatriate their funds. So they were trying to tend to all these demands and they were trying to clear it out, which is the major reason why we saw that the pressure on the naira was much, and also which was a major factor that caused the decline in the value of naira. So this thing is expected. The current devaluation we are seeing right now is expected. However, we believe that over time, in the long run, when we have been able to meet all those demands, when the supply is enough in the markets to cater for these demands, we are going to see a moderation as time goes on. And also, when we have a system that we can, let's say, our foreign reserve is in a better position and is in a better state as time goes on, we also see things that moderate over time.
Now, the acting governor of the CBN, after his meeting with President Tinubu, explained that the volatility of the naira in the parallel market is not solely driven by economic factors, but also speculative demand. Do you agree?
Well, to a certain level, I agree to that, and that is based on the fact that we have a lot of foreign diaspora remittances into the country. And the thing about these diaspora remittances is that majority of them they don't pass through the official market; they usually pass through the parallel market, and this cannot be captured in the system. Now, if we have a situation like this, it means that even the demand for the naira that we're seeing as people are converting these currencies will not is not going to show on the FX system, and it's not going to capture, let's say, this particular transaction. So it is not going to reflect on the value of the naira. This is something that is really causing that we also need to look at, because it's just people like market participants trying to take profits or trying to be in a best position, because if you can convert in naira from a rate, let's say a rate that is around 760 or 780, and you see another place that you can convert it to as much as 900 plus. So people want to use that particular space rather than use the official rate. So all these things are major factors that have really been affecting that particular place. So I will agree with them to some extent that that is also a major issue that we need to look at.
Now, Shonibi also said the diversion of diaspora remittances to the parallel market was putting pressure on the local currency.
Okay, well, it's good. Well, concerning that, what I would just say about that is that normally we won't be in this situation where the CBN is only the major arm that is responsible for any FX transaction in the country. However, since we've had a situation in which people can have this kind of arbitrage, there are some people that will even hold the dollar for a very long time without trading it, just to take profits and just to be in a more advantageous position. So all these factors are things that are really affecting the naira also. That's also putting pressure on the naira. However, as I've said before, as long as we have a system, we have our structure in the country that we have a strong export system that we are generating sufficient revenue in the economy, we won't really be experiencing this particular issue in the markets.
Now, part of the intervention of the CBN is to place limits on the exchange rates for naira payout of diaspora remittances. Now, what do you make of this?
Okay, so what I would just say about this is that I think this is just, part of the things that you are trying to do just to solve the issue. However, the major issue is not going to solve the major issue that we have. Market participants are always going to find any loophole in the system. Always going to look for any loophole just to have an advantage for themselves. So, in as much as they do this, I believe this is just like a temporary treatment. It's not like a long-term cure or a long-term treatment for the major issue we have at hand. So, I would just say that it's just a short-term solution to a long-term problem.
Now, let's talk about Nigeria's foreign investment. Plunged to a 6-year low. Now, how serious is this situation?
Okay, yeah. So concerning this, now the number one thing you have to know is that when it comes to capital importation, we have three major subsectors of the capital importation. We have foreign direct investments, we have foreign portfolio investments, and we have other investments. So the foreign direct investments, it is for investors with a long-term view in a country, and the foreign portfolio investment is for that investors that have this kind of a short-term view for a particular country. So these are investors that want to invest just for the short term. So and they usually tend to like target the the bond market, the equities market. Now we've seen an influx into that the foreign portfolio investment over time, although it has been at optimal levels. However, it has always been like the one that have had like the highest among the other two subsectors of the capital importation. Now, when you look at it, it's just saying that investors do not want to take a long-term position in the Nigerian economy. And why do they want to do this? The major reason why they want to do this is because they believe or they think that the economy is not stable enough, and they might not really want to like commit too much in such a way that they will have to like dump their investment later on and exit without making reasonable returns on their investments. So they tend to like fall back to the foreign portfolio investments, and when they do this, they just find a way to like do their trade, do their investments, take their profits, and then exit the market again. But for the foreign direct investments, investors are looking for a longer term, for a long-term view. They want to like invest in a country, start up a business, and also do a long-term investment in that country. And the reason why we've been seeing a decline in the foreign direct investment is because investors don't want to take a long-term position in the Nigerian economy. They are still somehow like tepid, and they have this kind of apathy. Inflation is has a significant record currently. Inflation is significantly high. Also, the cost of doing business in the country is significantly high. So these are metrics, these are factors that investors really want to look at before investing in an economy. So in a situation where these numbers does not bode well, or they believe that these numbers are not really like let's say favorable for them, they will not want to take a long-term view in a particular economy, and that has been the major factors that have been affecting them. And also, just to add, you realize that before we've been having this FX system that has really, really been affecting investors. They've not been able to repatriate their fund because when we add up a peg iron even then it is always very hard. FX supply was not coming from the CBN. So investors are really worried about how to like do business and then repatriate their funds out of the country. So they were really worried about this. So this was a major factor that they considered also why they decided to like let's say to be somehow like taciturn before they invest in the Nigerian economy.
Now, finally, before I let you go, some industry watchers have predicted that the depreciation of the Naira against the dollar may continue for a while. So what next, really?
So as I've said, I believe that for if the status quo remains the same, if we've not been able to like meet demands as expected, we'll see that the naira will depreciate further. However, if we can find a ways to like ensure that okay, our export line is increasing, we are getting enough revenue, and our foreign reserve is at a better place, so we are going to be in a better position. And also there is reports that the CBN released before concerning the foreign reserve, we realized that the real net reserve was even lower than the 33 billion that we've been seeing over time. So we need to find a way to like let's say increase our foreign reserve to a reasonable level that is going to like ensure that the economy stays well, and also the naira is going to like be stable as time goes on. So if we find a way to like direct policies that is going to like bolster the economy, that is going to drive foreign investment into the country, and even foreign investment into foreign portfolio investment into the country, we are going to see the naira appreciate over time.
Malolabi Samson, Associate Research and Portfolio Management at Zcrest Wealth. Thank you very much for your insights and your contribution.
Thank you very much for having me.
And that's it on the program. See you again next time. Bye for now.